When I met you in the summer. Equity mind.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to the Equity Mates Summer Series, proudly brought to you by Sharesies. Over 12 episodes, we're deep diving into some of the most exciting, interesting, and well-known companies from Australia and the US. Each episode, we're also joined by an expert to help us unpack the key metrics, the bull case, and the bear case for each company. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. It wouldn't be an Australian investing podcast series on individual companies without a lithium stock. Yeah, at first cut, we actually had multiple lithium stocks.
Yes.
But we figured that one was enough.
One was enough, but you're right. We are digging into Core Lithium today, a company that has been well spoken about this year in the Equity Mates community and the broader investing community here in Australia. It's been pretty well covered as well. And our expert joining us in the second half of this interview is none other than Henry Jennings from Marcus Today, who actually had Core Lithium as his high conviction stock at FinFest in October 2022. So can't wait to hear his thoughts on Core Lithium.
We could just not do the recording with him and just play that FinFest recording.
Yes, I think subsequently he has told people to sell because it ran so hot. So interested,
really? The FinFest
interested,
bump.
Interested to get his thoughts on where it's at now.
If people do want to see that, YouTube.
Yes.
YouTube.com/EquityMates. All of our FinFest stuff is there.
That's right. Now, the Equity Mates Summer Series is proudly supported by Sharesies, and we love Sharesies for two reasons. The first is that there is no minimum to start investing. It's incredibly accessible. You can get started with a matter of cents. You can buy shares or portions of shares on the Sharesies platform for just 1 cent. You can get into Berkshire Hathaway that I think is trading at $400,000 odd or thereabouts. You can get in on that for only a matter of cents. And the second reason is, as we've spoken a lot about on this show before, that is dollar cost averaging. Sharesies allow you to auto invest, which means you can truly execute dollar cost averaging in Australian, in US and New Zealand markets. All those markets are available. Download the Sharesies app or visit www.sharesies.com.au to learn more. And if you'd like $10 into your account to get started, there is a promo code that is available to everyone. It's not Equity Mates specific, and we don't earn anything ourselves from it. It is GROW. Use that for $10. Promotion T's and C's apply. Let's do it, Ren.
Deep breath. Well, you forgot the last part of the intro.
Oh, yes.
Arguably the most important part. A reminder that while we are licensed, we are not aware of your personal financial circumstances. This is not a buy, hold, or sell recommendation. Any advice in the show is general only. We're here to educate and to entertain. Seek professional advice.
Entertain and educate, depending which way you look at it. Educate and entertain.
Didn't know that the order of those two words made a difference. But let's not get bogged down on it.
Well,
Core Lithium.
Yes, as we've been starting these episodes, company in a sentence, Ren, what have we got?
Lithium miner with mines in the Northern Territory and South Australia.
There you go. Because as we say, if you can't explain your company in 30 seconds, you shouldn't be investing.
Yes.
You just did it in 10.
And when we say Northern Territory and South Australia, the focus is on Northern Territory, really.
Yeah.
Yeah.
They just started actually getting stuff out of the ground this year in Northern Territory.
Not even this year. As we're recording, this month was the first shipment to port.
That's why it's going gangbusters.
88 Ks to Darwin Port.
Let's take a look at the history. So they discovered lithium at now Finnis in the Northern Territory in 2016. As Ren said, it's located 88 kilometres away from the Darwin Port.
And you know what, Bryce? A sealed road from Darwin Port.
Wow.
No, that actually matters.
Sealed roads?
Yeah.
Why does that matter?
Because you can, your trucks it's easier for your trucks.
Yeah, sure. That makes sense.
Well, don't be dismissive about it.
Well, it's like, is that a competitive advantage?
It is, and it's something they call out in their equity raising deck.
Wow.
88 kilometres sealed road to Darwin Port.
It's not the electric, self-generating electric train that old mate Twiggy has, but we'll give it a sealed road. They have been working.
All right, Bryce Lesky, too good for a sealed road over here.
So since 2016, they've really been working to get the mine built and actually getting some lithium out of the ground. And as you said, Ren, March 2022, they commenced mining, and subsequently this month, they actually started shipping
Yes.
lithium.
So that's its history, short history. Core Lithium today, it is developing one of Australia's most capital efficient and lowest cost lithium projects at Finniss, and they've already signed some big deals for offtake. Some big customers, including Tesla, a 4-year deal with Ganfeng Lithium to take 300,000 tonnes, a 4-year deal with Yahua also to take 300,000 tonnes. God, I'm stumbling over my words today. And then a 4-year deal with Tesla to take up to 110,000 tonnes. The point being that lithium is so in demand that this mine wasn't even built yet, and they were already getting these big multi-year offtake agreements.
Yeah. Well, it's funny you say that mining is in demand because as at the time of recording, and this is at the start of December, last night on ABC News, Alan Kohler loves to show a lithium, the price of lithium.
Okay.
I reckon it's a weekly chart that he'll throw up.
Okay.
And lithium continues and is currently at an all-time high. And we'll get to some of the price and drivers of that shortly, but I just thought it was timely given that we were recording this episode today.
Yeah, I particularly want to talk about their C1 cost, like the cost to get ore out of the ground and to get it to port. When we're talking about the company, when we're analysing this company, it's got its mine today that it's operating, but it really sees its future in lithium in the surrounding areas. And so while it's mining where it is mining, it's also exploring around that area. It's got over 500 square kilometres of tenure over, quote, highly prospective ground for lithium in the Northern Territory at Finniss. And if you look at their investor charts, their maps in their decks, they're exploring at some places. They're feeling pretty positive about other places. So they basically think they can take what they've got and expand it. And they think they're going to be mining lithium in the Northern Territory for a while.
Yeah, at low cost. So they say. Love to see it. We've got one of the world's lowest cost iron ore producers in Fortescue.
Yeah.
And hopefully one of the lowest cost lithium producers as well, sitting in our backyard.
We are right now the world's largest lithium producer, but we do not have the world's largest lithium deposit.
No.
Do you know where that is?
Bolivia.
I think it's Chile. Could be Bolivia.
I think Chile's third.
Really? You've nailed it then.
Bolivia, Argentina and Chile.
And you know what the good thing that Australia does? So there are 2 ways to mine lithium. The first is good old Australian mining.
Dig it up.
Dig a hole,
Yeah.
take it out of the clay or the ore in the ground. And then the second way, which is really the way that the South Americans do it because of where their deposits are, is to pump underground water to the surface and then basically
Evaporate it.
Yeah, evaporate it, yeah. Scientists correct me if I'm wrong, but I'm pretty sure our way is a lot more environmentally friendly than the South American way.
Digging it up.
Digging it rather than
Evaporating.
getting the underground water to the surface and evaporating.
Yeah. Fascinating process, that one. But yeah, the Core Lithium are digging.
They are digging.
They are digging
down
in a
to
big
the Earth's
way.
core. It's in the name.
Yeah, it's true. Well, let's have a look at the cost to produce, Ren, because it's obviously a key part of an investment thesis when it comes to looking at miners and thinking about which ones to go with. And if they do say they're going to be one of the cheapest, they believe that they can produce 173,000 tonnes of high-quality lithium concentrate. Now, here's some jargon, at a C1 OPEX of...
Or OPEX even.
OPEX.
Dude, you're at Woolies. You would have used the word OPEX.
Yeah, definitely. Of $364 US dollars a tonne.
Yes. And what's the price of spodumene concentrate?
So, Ren, the current price of lithium spodumene is sitting at just over 6,000 US dollars per tonne.
Yeah.
So let's just put that into context. If we've got the numbers right here, they're producing C1 OPEX of $364 a tonne and then selling it for over $6,000 a tonne.
Yeah. And I don't know how this episode will be edited up, but for context for people, Bryce and I have spent about 10 minutes Googling and reading Core's stuff because we feel like we missed a zero somewhere in those numbers. But no, the company says they can get 173,000 tonnes per annum out of the ground at that $364 a tonne mark. And then that's their cost. And then the price is around 6,000, 7,000. And Bryce, just a quick bit of jargon. We've said C1 a few times. We should explain what it means. It's basically like the direct cost of production. So your cost to get the mineral out of the ground, to process it if you need to, and then freight to get it to your customer.
Yeah, I mean, if you're doing some Googling into the prices of lithium spodumene, which is what they're digging out of the ground, the price rise this year has been astronomical.
Yeah, it has been.
Yeah, there are articles written in July saying that the prices for lithium spodumene are projected to average about $2,000 a tonne and ease to about $2,000. But they're kicking at the moment.
Well, I mean, Core Lithium have their own projections, but again, confusingly, the price is different. So the spot price in September 22 is just under 7,000, which is right. Core forecast in F23, that price will come down to just over $3,000 a tonne, and they think there will be a pretty smooth trend line down. By F27, they think it will be just a bit over $1,000 a tonne, and they think the long-term price will be around $1,000 a tonne. So keep in mind that's still like a 65% gross margin if you're selling something for $1,000 and you're spending $350 to produce it.
It's an interesting dynamic because the demand for lithium is not going to be decreasing, but there's going to obviously be more supply online.
Well, two things, and this is probably the key thing when I think about lithium generally. There's obviously always going to be demand, but the first thing is the supply question. When will South America get their act together and produce? And they are. But then the second thing is, right now, lithium-ion batteries are our best form of storing energy, and so they go in everything. But you have to think that if lithium becomes if lithium becomes the bottleneck in the system, if it becomes the constraint, either because of cost or because of availability of the resource, there will be a huge economic incentive to find another way to efficiently store energy or store electricity without lithium, like to other types of batteries, is what I'm saying.
Yeah, but isn't it? I mean, it's not like that. There's been an abundant supply of lithium to date.
But supply and demand have been in concert. Look at your Alan Kohler graph.
They're not now though.
No, they're not now. That's why there's an economic incentive now, but there wasn't 4 years ago.
Yeah.
When Apple was putting a lithium-ion battery in our phones and in our computers, they could get the lithium they needed.
I was like 5 years too early on the lithium trade.
There was literally, there's a mine, I think in WA, that is now one of the biggest lithium mines in the world. But like when it was started operating as a mine, it was a gold mine. And I
think it's Sayona.
Oh, really?
I think so. They have WA operations.
Yeah, and they just didn't. They didn't care about the lithium, but now they care about the lithium. That's capitalism, baby.
Yeah. So let's have a look at the numbers for Core Lithium. Market cap $2.5 billion. It's up 112% year to date. Hot stuff. And it is up 1,114% over the past 5 years.
It's 10 bagged before it's brought in $1 of revenue.
It's always the case with these.
Always?
Mostly.
We should start a mining company.
Well, and then you look at then see what happens from here. But great if you're a Core Lithium investor 5 years ago. Revenue, Ren.
And even better if you're a Microsoft investor 30 years ago.
Revenue, Ren. Pre-revenue.
Pre-revenue.
Yeah, they will just start generating. They did make a loss this last year of $7.5 million.
Would have been amazing if they made a profit.
I know, given that they're trying to scale up their operations.
No, given that they have no revenue.
Well, that's of course.
Yeah. They spent $7.5 million last financial year building out their mine as expected.
Yeah.
Yeah.
So we're going to get Henry's thoughts on Core Lithium, but before we turn to that, it is worth just going through some of the numbers that we haven't touched on in terms of industry and macro. So Ren, you spoke about the two ways that you can dig up lithium from the ground. Australia has the literal dig it up. South America has the force it up with water from the bottom.
Yeah. So I'm just reading ahead. We've got the world's largest lithium supplies. You've got Bolivia number 1, Argentina number 2, Chile number 3. But if you just Google world's largest lithium reserves, the first response is Chile number 1.
Ah, interesting.
But then, in your defense, if you go to the second one, it's Bolivia, Argentina, Chile. That's probably the one you used. Third, Chile, largest.
How many tons though? I'm pretty sure I got this from the lithium body.
Really?
Yeah, because I had this same thing when I was doing some research.
Another one, So another one says Chile. Another one,
I think we can agree that it is South America.
it's called the Lithium Triangle.
Yeah.
Argentina, Bolivia, and Chile together account for more than 63% of the world's lithium reserves.
Yeah. So let's put that into context. Australia ranks 5th, depending on which list you look at, with about 6 million metric tons of lithium reserves.
When we're talking about individual companies, who cares how much Australia has? Like, if you want to invest in Core Lithium or Sayona or mineral reserves, you only really care about how much they have and what it costs to produce.
Yeah.
And then you just you could have an American. Well, there was another one. Oh, no, Sayona that's big in North America, right?
Yeah, Canada.
North America doesn't top any of these lists for lithium reserves, but if they have enough and they can produce it cheaply and they can get it out.
Yeah.
Great.
Top 3 lithium producing countries. Australia sits at the top, 55,000 metric tons a year. Then Chile, then China getting in there. China produces 14,000 metric tons a year.
So add those 3 together, 55, 26, 14. That's 95,000 metric tons. In 2021, the world produced 100,000 metric tons.
Yep.
So those 3 are the big 3 for now.
Yeah.
Obviously, Argentina and Bolivia will come to the party at some point, but right now, they're the 3. So in 2021, the world produced 100,000 metric tons of lithium. What do you think the world's demand for lithium is this year?
4 times that.
It's almost like you read the script. It's actually 5 times. 500,000 metric tons.
Yeah.
This year, that's what expected demand is going to come out at. By 2030, experts think it will be 2 million metric tons. And we produced 100,000 metric tons in 2021.
So we need a lot of supply to come into the market ASAP. Otherwise, the price of lithium feels like it's absolutely going to go to the moon. Or, as you said, it becomes so expensive that it becomes a little prohibitive.
It's a constraint, and then we innovate around that constraint. It is important to note, though, that when we're talking about individual companies, some of where the world's reserves are don't matter so much. Like, if you're just looking at Core or you're looking at Sayona or any of these lithium mineral resources, any of them, it's how much do they have? What can they get it out of the ground for? And then what's the lithium price?
Yeah.
Some of these bigger conversations around where the rest of the world gets their lithium from, not as relevant.
Yeah.
Obviously, supply and demand affects price, though. So lithium has now become a real security concern. Yeah. And I think that security story is no clearer than in Canada. So in November, Canada forced China and Chinese companies to sell their holdings in 3 Canadian mining companies. I think all 3 of them actually were lithium miners. Canada didn't want China touching their lithium miners. That's the level that we've got to now.
Yeah. Well, it's a major input into some pretty important technologies, and so you can understand why. Well, particularly that, given that China is one of the biggest producers as well, it's becoming a bit of a political
and one of the biggest users.
sore point and users.
Yeah. I think that's the main thing for Canada. They don't want their mining companies to have to sell to China.
You're also seeing some pretty interesting joint ventures and collaborations between technology companies and lithium suppliers as well. As we've seen, Tesla, I'm not sure if it's fallen through with Core Lithium or not, but they did a deal with Core Lithium and likely to see more. So pretty important resource.
That is a good call out, because I think earlier in the piece I said they had a deal with Tesla. I think it did fall through.
There you go.
Do your own research.
Now, Ren, before we take a quick break, a reminder, you can access Core Lithium via the Australian Securities Exchange. The ticker is CXO, and you can access the Australian market plus US market and New Zealand markets on the Sharesies platform with no investment minimum. Sharesies is helping to create financial empowerment for everyone. Their vision is to give someone with $5 the same investment opportunities as someone with $5 million. So invest with no minimum with Sharesies. All investing involves risk. This is not a recommendation, and you should perform your own research. Promo T's and C's apply. Now we're going to take a very quick break, and we'll be right back to discuss Core Lithium with none other than Henry Jennings, analyst and investment manager at Marcus Today.
1, 2, 3, bring it back.
Hey, it's another delightful day here in Vacation Land.
So, Ren, we're super excited to welcome Henry Jennings, analyst and investment manager from Marcus Today, to talk us through the bull case, the bear case, the key metrics, and what Core Lithium looks like for the next 10 years. So Marcus. So, Henry, welcome.
Hi, guys. Good to be here again.
Yes, absolutely. Can't wait to get stuck in. So, the first question we've been asking all our experts, Henry, is around the metrics. Ren and I have had a bit of a chit-chat about the numbers behind Core Lithium, but when it comes to analysing these sorts of mining stocks, what are the key metrics that you're looking at?
Well, I guess one of the key metrics is how big the deposit is in terms of mine life as well going forward. But the other one, which is probably the most important at the moment, is the fact that it is Johnny on the spot. It is the guys that are next into production. In fact, they've already started shipping DSO they did their first shipment recently, which raised about $20 million. So that is the important thing. They are the guys that are the next producers. Now, the Finniss project near Darwin is not the biggest project. It's not as big as Pilbara. It's not as big as some of the South American ones, obviously, but it is the next one there. And of course, that means that they can take advantage of the high prices that we're seeing in lithium now. You know, we have seen the lithium price plateau a little bit and come off a smidge, and we've seen some sort of decrease in Chinese EV sales. But let's face it, if you're locked at home, you're not exactly going to buy a Tesla, are you? So that's understandable. But so for Core Lithium, it is really about the mine life, which we know is relatively short, but it also is about the exploration and the drilling, which is going to extend that. And there's plenty of opportunities around as well. There's a company next door called Lithium Plus. LPM is the stock code, which has a lot of ground around them, and they've had some quite interesting results as well. So it really is, I guess, for me, about taking advantage of those high spot prices. And unfortunately, it doesn't happen instantly. You know, they've been building this project for a long time, and there is some issues that we will talk about in a minute potentially with that in terms of ramping it up to get to that full production, because you don't just turn a mine on and instantly it's at full production. That's not how it works, so it takes a little while to work that out. So it is about taking advantage of the current prices, and at the moment the market is valuing Core Lithium at sort of $2,000 a ton for their product, as opposed to where it is $6,000, $7,000, $8,000 a ton. So it's very undervalued. If you were to put in spot prices, which is sometimes a dumb way of doing it, but if you did that, you know, you come up with a valuation around $5.
Just on that, with entry into companies like this, you've mentioned that it's great because it's live now and lithium prices are high. But, you know, as part of the summer series, we did look at other lithium companies, Sayona Mining, which has their Quebec
Canada.
in Canada, and they're about to come online. And then there's probably a handful of others that say that over the next 2 years. Is the entry points to these companies, just before they come online, or how do you think about getting in on these?
Well, I guess it depends on how much risk you want to take. I mean, they go through a cycle. They obviously go through the drilling cycle, and they have to then get the money to do the project. Then they have to build the project, then they have to ramp up, and then they just become a producer. So depending on where you are on that risk curve is where you want to invest. You know, buying something, I bought Core Lithium 5-6 years ago when it was a glint in its mother's eye, and it was 5 cents. You know, they even did a capital raise, a share purchase plan at 31 cents, and I topped up then. And that wasn't that long ago. And as the timeline of mining projects, they get closer and closer to production, you do get that value uplift because it's de-risked the project. Now, the question, I guess, is once you start production and you get up to sort of the boilerplate capacity of production, where do you go from there? Because then it's a kind of a diminishing asset, if you like. They're getting cash in the door, but it's a diminishing asset, so they've got to keep drilling to do that. So it tends to be maybe that share prices plateau a little bit after the production kicks in. And then there's always issues of maintenance, production problems, weather, all this sort of thing that then becomes far more kind of prosaic in terms of the actual thing, rather than that big hope and that big optimism that we have. You know, projects starting, they're going to take advantage of the big prices. Depends on where you want to be in that risk. And obviously, if you're just investing at the 5 cent mark, there's plenty of risk because they've got to get DFSs and bankable feasibility studies, offtake agreements, all that sort of stuff. So that is risk. And you have to stay. I mean, this was 5-6 years ago I bought this thing at 5 or 6 cents. So it can be a long journey, can be a very lucrative one, but for years it did nothing.
Yeah.
You know, and I got bored senseless. I'm surprised, to be honest, I didn't lose interest.
Got rid of it.
Chop them.
You obviously believed in, like, it's not like it was the only lithium option.
No, it wasn't. I guess part of the thing that made me keep it was that I had a meeting all those years ago when I first bought it with Stephen Biggins, who was the CEO and the driving force behind the project. So meeting the management and seeing that these guys could do what they say they were going to do kind of gives you confidence and optimism to hold it. And, you know, it does get stuck away in the bottom drawer and you think, okay, well, one day it'll happen. And sometimes it doesn't and sometimes it does. And in this case, it does.
Now, Henry, talking about the metrics, one that Bryce and I got a little, not stuck on, but surprised by was their C1 cost, the direct cost. The company forecast that they can get 173,000 tonnes of lithium out of the ground per year at $364 a tonne. And the spot price is what, it's around $6,000 or $7,000 at the moment? Is this company just going to print money for a few years?
Well, if you look at the example, for instance, of Pilbara, you know, that is a money printing machine now.
What does their OPEX cost come in at?
I can't remember off the top of my head, but it's pretty low compared to the prices. And you've got to remember, all these guys will be doing bankable feasibility studies, and all their studies will be based on really, really conservative numbers. This big leap in lithium is just a massive sort of cream on top for these guys. And you can see, even with the coal companies, you know, the Whitehavens and the New Hopes, these extraordinary times that we're living through in some of these energy materials. So as a result, you know, it's the costs look quite cheap, but they probably weren't when they did, you know, all the studies and everything. And if they can achieve that, they're going to make an absolute mozza, and they're going to be churning out cash once they get to capacity, churning out cash and taking advantage of those high prices. But you know, and they will become a mini Pilbara.
Yeah.
And they won't really know what to do. Pilbara now got to the stage where they don't really know what to do with all the money. You know?
Must be nice.
Well, I mean, it's the same with, you know, Whitehaven and all these guys. What do you do with all this cash? The market hates you buying, you know, making acquisitions. And we've seen this time and time again with resource companies. When they make lots of cash, they don't know what to do with it. So they go and spend it on something dumb. BHP and Rio Classic used to buy things at the top of the market because they had so much money. And the danger is that they do that. Now there's a sort of precedent that dividends start to flow. Pilbara, we've seen them now talk about their dividend policy for 2023, and they could have a 34-cent dividend, in which case that's a pretty flash yield.
I know investors are impatient and they hate to see money sitting in a bank account. It's either like, do something good with it, buy back shares, or give it to me and I'll do something with it. But surely from just, forget the investors, surely from a business point of view, it makes sense to put it in the bank, wait for the market to turn, and then buy things at the bottom of the cycle.
It makes perfect sense.
But no one does it?
Well, some people do, but it's you know, it does make perfect sense, you know. But investors and shareholder activists are pushing, and they push BHP to split, the demerge the UK listing and all that, and get rid of the oil and gas assets, which they've done. There's a lot of pressure on these companies to give rewards to shareholders. You know, it may be a small token one. And also remember that there are an awful lot of funds out there that can't invest in a company that doesn't pay a dividend, which is why News Corp pay whatever it is, a cent or something, because it's a token, and everyone goes, well, why did you bother? And you think, well, there's a reason why they bother, is because that way a fund who's only allowed to invest in companies that pay a dividend can invest in News Corp. And at some stage, Core Lithium will be throwing out enough cash to start paying that back to shareholders, having taken care of the fact that they've got to drill and explore and enlarge and keep, you know, developing the resource that they've got. Because it's kind of, it's a weird, it's not a big hole in the ground that they're going to produce. It's sort of spots. It's concentrated in spots, the same as Lithium Plus next door. They've got these sort of 5 or 6 different spots, and together they're a good resource. but individually they're probably not. So it's only when they're close, combined, and close to infrastructure as well. Of course, it's only 90 k's from Darwin, which makes it that attractive.
Along a sealed road, as we learnt.
God, I love a sealed road. Be nice to get one in Sydney, wouldn't it? Nice to get a sealed road in Sydney without potholes.
When they discover lithium under Darlinghurst, that's when we'll get it. Yeah.
Well, it's there. I mean, lithium is not it's not that uncommon. I think it's one of the most common materials in the Earth's crust. It's just finding it A, in the right place, and B, in sufficient concentrations that it's economic. There's lithium in seawater, but not very tiny weeny amounts.
So, Henry, you pitched Core Lithium as your high conviction stock at Equity Mate's inaugural FinFest 2022, and it absolutely went on a tear after that.
It did.
Equity Mate's bump.
Yeah, the FinFest bump, as they're calling it.
FinFest bump.
Is that what they call
Yeah,
it?
that's what. Not us. That's what people are calling it.
Not us.
Not me.
But it went on a tear, and then I'm going to say about 2 weeks ago, from time of recording, it's early December. You put out a sell.
It wasn't an outright sell, it was more a take profit.
Take profit,
mainly
okay, trim.
Because it had run. I think it was $1.15, $1.16 that weekend of FinFest on the Friday, and it got to $1.90 within a month.
Hell yeah.
Which was great, but
you say it like it's a bad thing.
Well, it is a bad thing in some respects. It is a bad thing in some respects because you don't want the fireworks that flash into the sky, big burst of flames, and then it looks really pretty, and then crashes to earth and takes out someone's house.
Yes.
You want the nice, gradual, grindy, burny, up she goes, and it's the quiet achiever, and you turn around in 6 months' time, and it's $1.80. And you think, oh, that's nice. Rather than whoops, up she goes, then back down to earth again. And that does put people off, especially if they came to the story somewhat later than FinFest, and they're sort of long at 160, 170. And then it crashes to 135. They're going, well, this is a suboptimal experience. Whereas those that got in early and were shrewd enough to say, you know what, nothing goes up in a straight line forever.
So it was a trim or take profits. Is there still a bull case from here for you? What's the bull case?
There's definitely a bull case. Obviously, they're coming into production. The reason that I said trim, apart from the share price, was that all along the story had been they were going to get production in 2022. Last quarter of 2022. And they have had this DSO production, which they didn't bargain for. This was direct shipping ore, which they didn't think was going to happen, and that has happened. But the production, the big production, or the start of the big production, is not happening till the first quarter of 2023. So that is a bit of a negative. That's why it was kind of a trim, take some profits, because the market was all getting excited. And I think that also there was an excitement that, apart from FinFest and you guys, obviously, but there was also an excitement that there was a lot of speculation at the time about takeovers. And it makes sense at some stage. The majors are going to look at this space, and if they haven't gone dull, missed it, then they missed Pilbara. Pilbara's now a $15 billion company, whereas Core Lithium is a fraction of that size, and it's not going to be another Pilbara, but equally, it could be the base of a mini Pilbara, and it could be something that someone could buy. So I think there was a bit of media speculation in there, and I think there still is, and that's why, I think some of these... if you're Rio, say, you don't buy the company when it's 5 cents because it's got all that risk. But once it gets into production, someone else has done all the hard work. It's not like they're short of cash. Someone else has done all the hard work, and then they can start to reap. They know how to sweat producing assets. They're not always great explorers. They'll let someone else do that, and then they'll take it on once it starts to produce. So I think that's one of the bull cases. Obviously, high lithium prices is a big bull case for it, and it's in the right place at the right time. There are some negatives, if you want me to talk about the negatives.
Well, let's get to that bear case. What are the negatives?
Well, the negatives obviously is the lithium price. which has gone up in a straight line, pretty much the same as Core Lithium's price. The other negative we have seen is there has been quite a high turnover of senior management. Now, that can be okay because the guys that drill and explore and then create the project, not necessarily that interested in running it from there. They get turned on by going and finding a new deposit, developing it, do all the studies. That's their thing. It's like, it's like any business. There's certain people who like certain parts of it, and other people are happy to take over the more boring, hey, let's just dig the dirt out, send it to China, that side of things, which is a bit less exciting. So, but there has been quite a high turnover in senior management. Also, it has been quite wet up there, so we potentially could see some delays to that production coming through, which would then disappoint the market as well. So there are some negatives. The ramp up is always, things go wrong, things break. It's when you're starting a new project, starting a new mine, producing, then you've got to produce. And if something goes wrong or a bit breaks or whatever, or it's the wrong part that gets sent from wherever, then things can take time. So there is a risk of delays to that production, and senior management. It has been a bit of a it's a bit of a roundabout at the moment.
One other, so you mentioned the lithium price there, and Bryce and I were speaking earlier in this episode about Argentina, Bolivia, and Chile, the lithium triangle or whatever they call it. Australia produces more than double Chile at the moment, but the biggest deposit in the world is over there. What's going on over there? Is there a chance that a massive supply from South America comes into the market, or like?
No.
Okay. Yeah.
I think is the answer.
Great.
Hell yeah.
Well, there's a number of things. Apart from the fact, Chile's just got a new president, new government, and they, we're seeing environmental concerns, especially in Chile, from farmers. The brine business is pretty water intensive. It takes a lot of water. It can, you end up with a big pile of waste. Farmers aren't particularly chuffed. I mean, everyone wants to electrify the planet. Everyone wants electric vehicles and to make it a green place. But the ironic thing and the tough thing is that in order to do so, we've got to dig this stuff up or evaporate it or do something or get, materials, mining. We need to do that. But nobody wants it in their backyard. Yeah. And Chile is probably easier in Argentina because where it is not farmland. It's high up. There's not so much rainfall. I was talking to a guy from Argosy, which is in sort of Brazil as well. They don't have the same problems that they have elsewhere. And the whole brine game takes a long time. Yeah. You're looking at 18 months unless you speed it up with some technology. And the technology is not really sufficiently developed on sufficient scale to just flick the switch and go, yep, there's your lithium. Yeah. That's the problem. That's why prices are going to stay relatively high, because the supply just really isn't there. Yeah. And it's not just projects are hard to come by, big ones. Geology is, people don't want it in their backyard. Finding the projects is hard, and also finding the people. I saw a guy present at a conference, and he was saying that basically geologists are getting old and dying, and there's no young kids that want to go into the mining industry.
Really? Yeah, wow.
Well, because they all want to save the planet.
Yeah.
The mining industry is dirty.
Certain irony there.
Yeah, they all want to save the planet, but they don't want to actually go and work in sweaty, hot, dusty places in the middle of nowhere where they're surrounded by nasty creatures and all this sort of stuff and deprivation rather. You're not going to be able to go out with your mates. You're going to be on an alcohol-free place in the middle of nowhere. FIFO. They don't want to do it. It's a dying. The guy actually did a straw poll of the 100 people in the room, and they were all old people like me. And they said, who knows a young person that's starting university that's going into something to do with mining, geology or engineering or something like that? One person out of 100 put their hand up.
Wow.
Really?
There you go.
Well, if any young people are listening, there's probably going to be plenty of jobs in lithium mining.
There's plenty of jobs in mining, full stop.
Yeah.
But it's not very conducive for young people's social lives.
Yeah. Well, Henry, to close, speaking of the future, Core Lithium, if it is successful in its ambitions, what do you think it looks like in 10 years?
And maybe we actually extend it to 12 years, given that's,
Given the mine life.
The mine life, yeah.
This is a great start for them. They've got a lot of cash that's going to come their way. The question will be what they do with that cash over the next 10, 12 years. Obviously, there's going to be some drilling and exploration, but there will be some acquisitions because it's kind of, you're building a foundation of a mining house or mining company on one project, and then you kind of, a bit Pac-Man-like, you kind of extend from there all around, whether it's neighbours, whether it's in a different country, and you diversify as well. So, it'll probably be a very different looking business in a decade. It will obviously still be lithium if lithium is the thing, and I suspect it will be.
Yeah.
But it won't just be the Finniss project near Darwin. It will be something in Darwin which is the bedrock and the cash cow that's producing the money that then allows them to go and pay dividends and then to go and buy other projects elsewhere in the world or in Australia.
Is there a chance that they decide we do exploring around Finniss, there's nothing else that's sort of good enough to mine, rather than trying to build a long-term sustainable business, we're going to sweat this asset, be as cost efficient as possible, give you guys as much money as possible, but in 12 years we will no longer be a going concern? Like, does that happen or not really? Yeah, okay.
No. It's these are lifestyle businesses as well for the directors.
Yeah.
They don't want the zero hedge situation where it's just a diminishing asset. The whole idea is to try and get it up there and keep it up there.
Yeah.
Through acquisitions, through new exploration, replace what you've dug up. That's their method.
Yeah.
That's what they do. It's very few mining houses or mining companies that just basically exhaust the asset.
See ya.
Yeah.
And then say, see you later.
You'd love to see that though. It's like in 12 years our share price will be zero. Do your discounted cash flows. We're going to spit off cash, but this is a one project deal.
I can't think of too many that do that.
Bryce and I are going to get into geology, and we'll do it for you, Henry.
Well, yeah, it would be an interesting business model. I mean, equally, it's an interesting business model to plough the money back into the company to try and keep finding more to replace the stuff you've done, because the risk is that you can't, and you do end up wasting the money and then becoming the company that goes to zero.
Yeah. Eventually, every company goes to zero.
We all go to zero. Everything goes to zero. It's the nature of the beast.
Well, Henry, we will leave it there. A massive thank you. A thank you to Sharesies for supporting Summer Series. For more information, head to sharesies.com.au to learn more. You can download the Sharesies app. But Henry, you said before that you reckon you can only speak to it for 5 minutes. I feel like you could speak to this for another hour or so. Thank you so much for your time. It's an absolute pleasure. Well called at FinFest. If you didn't get a chance to see Henry or Marcus at FinFest, their presentations are available on our YouTube channel as well. You can listen to Henry's thesis on Core Lithium as well as the presentation he did with Marcus. So thank you so much. But Ren, we'll leave it there and pick it up next week.
Sounds good.
You have been listening to an Equity Mates Media production. In the spirit of reconciliation, Equity Mates Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This podcast is intended for education and entertainment purposes. Any advice is general advice only and has not taken into account your personal financial circumstances, needs, or objectives. Before acting on general advice, you should consider if it is relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please speak to a financial professional. The hosts of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media operates under an Australian Financial Services Licence 540697.